Well, moving on now, earlier this month, India became the fifth largest economy in the world after it overtook the United Kingdom, whose GDP declined by 0.1% at the end of March 2022. And at the end of the first quarter, figures put India's growth rate at 13%. Even as fears of an economic slowdown hound many economies globally, India has maintained its growth trajectory. Can Nigeria learn from India? Are there similarities or not? Gbemisola Longe, Senior Development Analyst with STAIRS, joins us for that conversation. Hi, Gbemisola, good to have you this morning. Good morning.
Hi, Ini. Good morning.
So first of all, help us. Do we meet somewhere, Nigeria and India? Do we have similarities?
I guess I can start with the differences. One similarity is that they are both large economies. But to start with the differences, first, obviously, both of them, India is like 6 times larger in terms of like the number of people living in the economy, or like citizens of India. That there are about 1.3 people in India versus Nigeria that has just 200 million people. But then India's economy is much bigger. Now that it's the fifth largest economy in the world, its GDP is about 3.5 trillion versus Nigeria, that's about $500 billion. Apart from that, more important differences between India and Nigeria is that the structure of India's economy, and when we think about the structure of a country's economy, there are different ways to think about it. You could think about it in terms of trade, or in terms of, what makes up the country's GDP, or, employment. So I'll focus on just trade and employment because, that's directly impacts the people in the country. And in terms of trade, right, one big difference, I mean, we all know that Nigeria depends largely on crude oil exports for revenue, foreign exchange revenue, whereas Nigeria's crude oil trade makes up about 88% of or over 80%. So it depends on, what time of the year it is. It depends on whether crude oil prices are high or low and what demand is like. So it usually hovers between 80 and 90%. Right now, India, on the other hand, exports about 70% of manufactured goods, whether it's consumer goods or intermediate goods, but like exporter. And one big thing about that is whenever you trade manufactured goods versus raw materials that Nigeria trades in, there's a chance of you getting more bang for your buck. Basically, you're getting more earnings because you're not trading raw materials, you're trading things that are already produced. You've added some sort of, there's already value addition to it, which makes it more expensive and more valuable to the buyers. Another thing is India's employment distribution. While Nigeria has like about 50% of its labor force in the agri sector, the unproductive agri sector, India, on the other hand, has about half of its population in services. So think business process outsourcing and just different aspects of services, which is key, right? So people are not just getting employed, but they're employed in very valuable and very productive sectors and businesses that can earn them significant income that they can use to basically escape poverty.
Yeah, so services against agriculture. I think all we need to do is to develop the agricultural chain, and you can have even a lot of services come out of that if we're to follow India's example.
I mean, yes, but before you can develop the agriculture, so first thing we need to notice is what kind of employment is Nigeria getting in the agri sector. So largely we have we have smallholder farmers. Over 90% of Nigeria's farmers or people employed in Nigerian farming sector are smallholder farmers. Nigeria's agri is also largely informal. So you have people who are employed in the agri sector and are being paid off the books because, the sector is just poorly structured. But beyond that, we have a situation, and I agree with you that we indeed need to build the entire value chain for agri. But agri on a mechanized scale, agri on a scale where it actually generates significant income cannot employ or should not employ a huge portion of your labor force. So even though we're going to, and when we're even talking about services, so trade is an example of services, right? The trade sector, we don't count those selling, we don't count the portion of agri trade as part of the agri sector. So it's mostly like the production. So even though we actually improve the agri sector and is more productive, we would then move people out of the production side to the processing and to the trade side. So that's what we should be focused on, not necessarily like improving and ensuring that everybody else is a farmer or they remain in agri.
Okay, so we noticed that one of the things that India did was to focus on technology, focus on large conglomerates. I mean, up to the extent that they have a lot of outward FDI, foreign direct income. You know, they don't wait for the foreign direct income to come into their country. They also, you know, invest in other countries. And then you also have government inward-led growth. Is Nigeria lacking any of this? I know when you talk about startups, for instance, I mean, we're leading in Africa, so I don't know. Are we lacking any of this?
Yes, we're lacking everything. But like one thing that I'd like to point out, so first thing is you mentioned tech. Most of their technology sector, the technology sector is very, very vibrant. They get a lot of funding from, you know, countries abroad and things like that. So that's the first thing, right? They get a lot of FDI from the tech sector because they have, I mean, so it's not just, how do I put this now? So the Indian tech sector gets a lot of funding because they have developed it. So even though we have startups, our startups are still very early stage. There's still nothing compared to like the how much FDI the Indian tech sector is earning. So there's still a lot to do on that front. You also spoke about the conglomerate. So one thing India did before it began to I'm not sure if you can hear me.
I can hear you. I can hear you, Bimsala.
Oh, okay. Sorry, I look frozen, so that's why. So yes, one thing that India did with the conglomerates was that they received a lot of funding, a lot of FDI into the economy in the early 90s. So before they took on this protectionist stance, the first thing they tried to do was develop their economy, and they did this by receiving funding in infrastructure, receiving funding in their in this big organization. So an example would be Tata, right? Tata is a big conglomerate in India, and most of their funding, a lot of their funding, you know, came from abroad, although the organization is over 70 years old. So they received a lot of funding in the past, and also in the tech sector. Another sector where they received a lot of funding or a lot of inflow of income was in their business process outsourcing. So this is a service sector. It's almost like, so India sometimes will be called the customer center of the world because they have developed their labor force such that they take advantage of the fact that they speak English to provide business services to the rest of the world. So India provides tech, they provide customer service, and that might seem like a small thing, but then that sector alone, the business process outsourcing sector, has earned them about $230 billion. It employs over 5 million people in India. So that's one of the things that they did. And one way that they were able to achieve this huge inflow of income through the business process outsourcing was by developing the education sector. So they invested a lot in the education sector across different aspects of education, both basic education, technical education especially. So getting people to improve their skills in tech and things like that. So that allowed them to be at the forefront, and basically they just kept exporting their labor without, you know, taking people out of India. So that's one major way that they've been able to get funding. Nigeria, you know, has been able to export a lot of Nigerians, but rather than, you know, have them stay in Nigeria while the funds come in, a lot of people we're getting a brain drain situation where many people are leaving Nigeria and they're looking for greener pastures. Another thing is India was able to grow the way it has, or even implement. So I'll get to the inward-led growth in a bit, but what they were able to implement those kinds of policies because the conglomerates, they reduced the cost of production for these conglomerates, one by, improving infrastructure. Another thing is by removing bureaucracy. So bureaucracy might sound like, it's everything from not knowing if you'll be able to open a bank account in a day or register a business in a week, or, so this obstacles that basically prevent business owners or prevent businesses from operating as they should impede on business progress, and that is something that India sought to actually remove. So these conglomerates, like you have one company or one holding company that has an automobile company under it that's doing trillions of dollars. You have a company that like a steel manufacturing company, renewable energy. So they've been able to build these kinds of structures because bureaucracy has just been removed, and because they initially started by allowing foreign investments into the economy. And when foreign investment came in, they were then able to now build an economy that they can then protect. So what's this inward-led growth? It's quite similar to what Nigeria has been implementing in the past few years, increasing tariffs on certain products, providing subsidies for certain manufacturers. And these are the things that the Indian government has just, focused on in order to improve in order to attract investors into the economy. They know that a lot of manufacturers are living in China, and even before the manufacturers left China, right? India has the labor force. India has a lot of infrastructure. They focused and built roads. They built electricity. They've increased electricity by, I think, fivefold in the last 6 years or so, electricity generation. So things like that are just what placed India in a position where it was able to actually fix these inward-led growth or these import substitution or protectionist policies that Nigeria has tried to implement.
Well, some of these things you're saying are not strange in Nigeria, the protectionist policy, the subsidy, but it just seems like we're not getting, the tariff thingy to discourage importation, but it doesn't seem to be getting the same results that they're getting in India. Is there anything we're missing out?
Yeah, so India is at a level where it can afford to protect its domestic industries. Nigeria, on the other hand, cannot. I'll give an example, right? So in the agri sector, so one major sector that the government has tried to protect is the agri sector, ban the importation of rice, ban the importation of maize, different bans and different restrictions to the agri sector, right? Just so that in the government's goal is to protect the agri sector and have Nigeria be self-reliant in agri. But one thing the government needs to understand is cost of production in Nigeria is still very high. Transportation is still very expensive because of bad roads, because of very limited options. People need to move goods if you're moving goods from the north to the west, you need to move by a certain corridor. And that just limits people's options. There's a lot of informal taxes that people need to pay. There's a lot of things, right? Even wastage because of the bad roads and because of poor infrastructure. And insecurity is another thing. So people people have to face the brunt of not being able. A lot of farmers have stopped going to the farms because of the inability to farm as a result of insurgents and things like that. We also have issues with electricity. This year alone, the national grid has been down too many times to count. So these are the different things that make cost of production very high. On the other hand, you have India where, even without implementing these protectionist policies, investors abroad, manufacturers in different countries are happy to come and invest in India, and they're happy to come and because cost of production is low. India has a large population for labor and things like that. So the first thing the Nigerian government needs to do before attempting to protect any industry is to ensure that the production within the country is cheap. And how do you do that? Not by implementing and giving people subsidies, but by ensuring that when they produce, they are producing at a competitive rate with other parts of the world. And that's what Nigeria has been unable to do. So once we fix our cost of production issues, even the rice production, farmers are not, the Nigerian farmers are producing rice at a rate that is not competitive with foreign producers. So even when people import rice, even with the high tariffs and the high import duties and the exchange rate differences, people are still willing to spend that little extra to buy, foreign rice versus local rice that they feel like isn't of the same quality. So the Nigerian government needs to focus first on building the local industry, reducing cost of production, making it attractive for people to actually invest in manufacturing and production in Nigeria before attempting to protect the economy. If not, it's only the domestic producers that would suffer for it.
Yeah, Gbemisola, well, the reality of it, it sounds really tight at this time when we look at the economy and see the fact that more than 100% of our revenue is being used to service debt already. And so we do not know where that finance or funding is going to come from to develop those infrastructure and give, the space or the breathing space that's needed for cost of production to reduce. Thank you so much for... Yeah, you wanted to say something,
okay,
just briefly.
Yeah, I was going to mention that the government doesn't have to be the one to do all the investments and all the development. The Indian government didn't do it on their own. They employed a lot of foreign investments. They allowed a lot of people come into the economy to develop the economy. Today, India is trying to be at the forefront for renewable energy, and they're doing this by foreign investors, domestic conglomerates that are large enough to take on the weight.
They have to, but you have to win. You have to win the confidence of the investors first. Assure them you have security and the right environment, business environment. So it's a lot of work, but thank you so much. Gbemisola Alonge, Senior Development Analyst with STARS. Thank you so much for your thoughts this morning. Let's take a break. After the break, we'll look at another non-oil area and see if we can move things around there and make it better. That's after the break here on Business Morning on Channels Television.